Hey guys, this is Julie. Good morning. I'm going to go through the PT2 indicator, setting it up for your chart. In this example, this is a 30-minute chart of the E-mini S&P 500, and I have the Jats PT2 on the bottom. Profit target 2. There was a version 1, and now this is version 2. And if we look at the properties for this indicator, you'll see that you're able to make some selections or leave it blank. So when you put it on your chart, it defaults to this setting, and I'm going to remove the second instance. You don't have to make any changes, and it will give you the volatility of the last 14 sessions for that time period. So if you don't have anything checked, those two boxes, then it will default to the time period that's on your chart. So if you look at your right axis, you can see that there are threshold levels 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, up to 20 and higher. This is points, and this represents the point level for 30-minute volatility. And so you can see from historical time periods of the volatility zone that you're in, whether your volatility is in a low zone, a medium zone, or a high zone. And where are those? Well, 1 to 10 on the E-mini S&P 500 for a 30-minute chart looks like a low zone. Looks like price will often try to reach that 10. And if you're inside this little zone, then you can rely on the fact that for a 30-minute time frame on average, you're looking about 10 points in low volatility on average. You have higher volatility time periods, as I call them, uh, volatility channels, especially like after an event, comes out and the market is, the range expands greatly, which sends the volatility upward to the middle zone and the upper zone on your 24/7 bar. But you also have a volatility zone between 8:30 and 9 a.m. That's a very high volatility zone. And you can get an idea whether you are low, medium, or high on a higher time frame as well. So I'm going to put this, use time ranges, a checkbox, and I'm going to do a range between 8:30 and 9 a.m. So for the first 30 minutes of the trade session, put that on the chart. And now we can see as well that for that first 30 minutes, we have a range that price will probably trade in, given if we are in low, medium, or high volatility. So if we're in zone 1, I'm going to be looking for profit targets on a 30-minute time frame around 6 points, 6.25 points. So inside this low zone, if I'm going long, then at 6.25 points above that low bar, I would expect the market to be able to hit that at any given time. And you can see that we're in a low volatility period right now. And it's working its way up to the target. But if we go back and look at the other range, you can see that that is precisely what this little range is. So it goes from the mid band to the upper band of the Donchian. Do you see that? So it's correctly measuring that low volatility range. So if you were trying to go short, you would go from the high of the bar down as your profit target. See that? Target reached. So you put it on the low point of the 14 bars, and you look for that is where it's going to try to reach. So you have your range period in your RTH settings. So let's go back to our 8:30 to 9:30, and you can see that was right here. And here is the bar. So it reached it from the low, reached it from the low, reached it from the low, also reached it from the open. And if you use it as a stop off the open, the stop was not hit. So the open of these bars, the stop was not hit. And yet the profits were. So that is how to use the Jats PT. You can measure your low vol 10-point range, medium vol 10 point to 20 point, and high vol above 20. Maybe you don't even want to take trades when it gets above 20. You can say that it's just too volatile and you don't want to trade during this high volatility environment. So you can, elect to just sit on your hands and wait for volatility to turn back around, max out and come back in, which it always does eventually. And a lot of traders do that. Will trade these out of bounds, coming back in. Here's another example, a good one. Another one, another one. These are great tags. Tag it and come back in. So there's a lot of ways, to trade the volatility. You just need to know which volatility zone you're in and then have an idea on any given time frame about where that, profit target can be reached on average. So 6.25 points in low volatility zone, and that's what we're currently in. And that looked, again, like the right level for 8:30 yesterday, which is right here. So 8:30 to 9. The 6.5 points was reached. 6.25 rather, 6.25. So if you can just get the direction right, you can hit the target. Or that's the goal, right? Having a target to trade to. And like I say, I take them from the bottom or the top of the bar. So I have a volatility envelope. What if I don't want 8:30 to 9? What if I wanted to know what the range was going to be 8:30 to 9:30, the full first hour? That's what a lot of traders will use. They'll use this first hour low volatility, the 7.25, as the point to trade to for the entire day. So whether you want to, try for the 30-minute range, and then maybe you could do a 15-minute range, walk into it, 30-minute, 60-minute range, and then just play in and out of those three range levels, 15, 30, 60 in your volatility zone for your future bars uh, going into your volatility zones. You can even get, granular. What is the volatility for the power hour? So that would be 1400 to 1500, right? I'm in Chicago time, so 1400 to 1500. So I got my power hour. It's actually a larger zone, $9, 9 points. Sorry, 9 points. So that's 9 times 4 ticks to a point. 36 ticks at 12.50 a tick. That's $450 per bar risk that you really want to have to trade that for a profit target and stop loss. And if you do this on a 30-minute range, then you could, or an hourly range, you could use that as your risk for these bar opens. So if I put another ruler on here, and this time adjust it to 9 points, right there, and then change my time frame to a 60-minute bar. Now we can see that this, again, is how to set up to reach the profit targets from the bar open and then from the bar high or low. Target reached. Target reached. And target was reached to the tick on this last one. And then it rolled over. So something to think about, if whether you want to go in between a 15-minute range, 30-minute range, and 60-minute range. So you could have 3 different charts going, trying to reach those profit targets. And, if you're in a higher volatility, the middle zone, you're going to be using the PT3 indicator and trying to shoot for those outer targets. So the PT3 indicator is a separate indicator for the chart. It loads on the chart, and here you can set your period of time to either a range, that 8:30 to 9, or a higher time frame like a daily or a weekly or a monthly, and to, use your calculations on the open of the range or the close. It opens in the morning, so that's a different range than at the close later in the afternoon or in the evening. So the levels are different. So here's the open, and for a daily, and you can see that you've got now, let me minimize or remove the Donkian so that you can just see the distribution. Now you can see a bell curve, essentially. So the open is in the middle of the range, and to get the open, you can put the current day open high-low on your chart. I use the current open high. Let's see which one do I use? Current day open high-low. And I just turn off the high and low. This is a standard Ninja Trader indicator right there. So there is your open for the session. And you can see that you're in the middle of the range and how price now responds. You're in the middle of the range. And so if you're in low volatility, you're going to expect to stay inside that first standard deviation, right? So anytime you're in this low volatility, 0 to 10 points, you're going to really expect price to stay inside that first standard deviation of the daily. When you get out to the middle zone, that's when ideally you're going to be looking for, targets to try to reach the outer level. And here you can see that we went to the twos because we were in the higher volatility. So it broke the ones trying to get out. Here we have more twos breaking the ones. More twos, got down to the three here. See if we got up to the third level over 20, and we got down to the twos and threes. So, and here you were in your middle level. It was a really nice vol move, on low vol actually. The range expanded on low volatility. Um, you can tell the slope of the volatility, so you can see your range is expanding, and then it rolled over, and the low volatility just sort of drifted down in little tiny bars. And you had the high range expansion again on this white bars trying to reach it, send it back inside the distribution. So that was a long vol push to try to get this back in and end the down move. The bears were not having it and were fighting them for this bottom. And the long vol comes in, you can see right here, and pushed it off the bottom. It went up. So having the slope of the volatility and the zone will help you plan a profit target to trade, whether you're going to be inside that first standard deviation or go to the twos and threes. It is a general guide. It doesn't work, sometimes the volatility will be compressed. If you're wondering why you see volatility or price move, but the volatility does not, sometimes the VIX will be pinned. You know what I mean? They'll sit on the VIX. We'll do a separate video on the VIX. And so that's why you'll have a pin at a level, and price will sit there and try to break it. And sometimes they can break it briefly, but the vol still doesn't move. The vol is still pinned, but they'll break the vol. And that usually ends up in a snapback because they'll snap it back in to the zone instead of allowing it to run. But very interesting. You can have the levels for any time frame if you want to look, between 10 a.m. and 11 a.m. or, I don't know why you would want to do that, but definitely the last power hour and the first hour, get an idea of where you're trading to, where you are relative to the zone that you're in. So you can see in this middle zone between 10 and 20, our range went up. We would want to look for 26, 25 points right here, or right here we would want to 26.50. Let's see, going up here in this high zone at 23.75 to 33. So you know how many points that you're looking at for that 30-minute time period per bar as a target. So get our ruler out and take a look at this. 94.75 points. So let's set this for 23.75. There's 23. Try to get it to 23.75. Well, close is close enough. You get the idea. You can see that it was hit on each bar, you would have been able to hit your profit target. And if you can leave the trade open for the next bar. You don't have to have it hit just on that bar. You can just let the trade ride into the next bar and it will close it. But the profit targets are obtainable, is what I'm saying. You're using your algorithms to give you that accurate current volatility level based on the prior calculations. So you're not, just indiscriminately trying to guess where to trade to. Of course, you could always trade to a target. You know, like you may just want to trade to that daily PT3, or a weekly, if there was a weekly one or something like that above or below it. You can trade down to these known levels, Globex 3, things like that. But you can stay within your volatility zone. So that's a quick overview of putting the PT1 and 2 on the chart. The PT2 is the oscillator, and you can create your own volatility zones. You can use a minute chart. So if I wanted to see what a daily range was for one day, I could put it on daily, and you can see here now I've got a snapshot of how many points to expect for that low volatility 18 points range on a daily, and 36 for medium, 50, 25 for high, the full range rather. So if you're in low volatility, you would go between the 1 and the 2 for a point range. And if we see here, we're in holiday mode, 18 points currently. Because this is, Good Friday that I'm recording this, so that's why it's so low. You could, put together a range box of 18 points. So let's do that real quick. So we'll put this at 4,200. And then 4218 right there. So that really is the range, right? So I could put it on the low or the high. So I could run it from the current high right there, and then copy and paste another version of it and move it from the current low. So there would be my trade box of the current range that I'm expecting for low volatility. So now that I have my range box, I know that if it gets above that area, I will be wanting to see this volatility slope be going long. So let me put another instance of PT2 without anything on it so we can see that slope. So as in prior days, we would want to see that slope expand to the upside for the range to expand. If the slope is going down, like April 2nd, April 4th, April 5th, the range goes down. Every day, range goes down during this period. That low range contraction that we've experienced keeps price inside the first standard deviation most of the time, and you would want to buy or sell the top of the bottom of that range, or consider it if you're around another area. So just put the pieces together where you think volatility might be going, and give yourself a current snapshot of volatility at your fingertips for any time frame that you would like to test. So if you like to trade 8:30 or 7, 8:30 Central to 10:30 the first couple of hours and that's it, you can do the same thing. You could draw a box around that range for that time period, and you would know or expect to know where price might try to reach given the volatility zone that you're in. All right. Thank you so much. Have any questions? We have training on Wednesdays. Come in and I'll make sure you have templates to get started with and answer all your questions. Talk to you soon. Thank you.